you'll hear people, like, hey, do you believe you can time the market? No, but I'm just saying we should get out before it goes down. Well, that's, so they come up with all these different phraseologies for what amounts to the same thing, and then when you see it getting better, like, get me back in, it's like, you can rephrase it however you want to, that's market timing. And I think the key thing I talk about with clients is it's just not necessary. The last couple of weeks where we had that heightened volatility, people would reach out and say, what's the strategy? And it's like, we already have it in place. Like, if you're asking that question now, you didn't have a strategy. It's code for, should we sell and get out now? That's what they're really asking. They're not asking because we've gone over what the strategy is. Has it changed? Will you allow me to engage in that market timing that I so desperately want to do? But that's the disconnect. I think the biggest thing then to walk through with people is really understanding if you're not going to time the markets, and you can't, and everything that frightens the markets from time to time is always really there. There's always a geopolitical event. There's always some bad news all the time. There's some great charts that I've seen that go back from the turn of the 20th century to modern day. Just littered, world wars, assassinations, play, all these different things, and yet society advances. People stay in. Doesn't mean there isn't rebalancing and reallocations going on, there should be, but if they can stay in, they'll get that long-term return. And all the studies that show how people have missed out on the real returns of whatever they would have been invested in, it's because they're always hopping in and out. They didn't stay in it that whole time. Why? Two things stop you out. One, the volatility just gets so great you can't take it emotionally and you eject yourself. Or two, there's some financial hardship or need. It could be retirement. It could be a one-off unplanned event that comes up where you need that money. And so those are the two things that then tell you, like, well, how much risk can I take? What should I be in? And the real good news is, for the most part, to be honest, whether you're all in stocks or a mix of stocks and bonds and real estate, they all have a pretty long-term similar return if you'll give them time. You can relax that burden in the short run to be able to get to where you want to go long-term.